was at 85, everyone had sweat on their brow. The naysayers said that let's kiss goodbye to the bull market. But now crude at 80, crude at 60, nobody is feeling excited and very happy about it. Why is that? Why are markets not celebrating, or bulls are jumping with joy even though crude has got crushed?
Good morning, Nikunj. You're very right. Crude has followed from a level of about $85 to a barrel on the Brent towards $60 range. This is going to be a major positive for Indian economy. And the question that you have in terms of why the markets have not responded to this sharp fall, I think there are a couple of issues. One, we really don't know whether this is going to be a longer term trend or it's just a blip, because we all know that there were speculative positions around Iran sanctions that has got unwound, and also we have seen on a fundamental side the US production going up. The key would be to look at what will be the decision of December 6th meeting of OPEC, and whether non-OPEC countries which are large producers of oil will also kind of go with them. If that happens, then we could see some trend in terms of oil. And overall, I think the other issue that we need to contend with at the market level would be of the valuations. While clearly there has been a correction in the market and the markets have seen lower valuation levels, it is not very compelling as yet. And that's the reason why we have not seen too many positive notes on the market.
Okay. Right. So, Harsha, do you believe that come third quarter, because it seems that the one reason why market has been held back, and that's been the case ever since earnings has been, that Q2 has largely been in line to a very muted earnings season. Do you believe that there is case for a significant revival come Q3, now that crude also seems to be holding steady? So in that sense, the RMC pressure as well would be off a lot of segments.
There is always a lagged performance that is shown in corporate earnings whenever there is a move in crude oil, which happens to be one of the major raw materials, or the derivatives of crude are usually raw materials for manufacturing companies. And also there is a large component of fuel cost that flows into manufacturing companies. I would say that at least half the quarter we would have seen higher oil prices, and there would have been some inventory that most of the manufacturing companies would keep. So very unlikely that in December itself you will see a great margin recovery. To that extent, we are not hopeful of any upgrades for financial year 19 numbers. But I think 20 numbers, which are anyways on a higher side currently, can still come through if crude remains at these levels, and also there is normalization in the overall economy, especially on the NBFC segment and the lending that has happened there.
Right. Harsha, this is a question that I've asked most fund managers. Does it get tricky from here in lieu of the event risk in elections? Or, as of now, I think it's too premature to protect portfolios or build portfolios that could defend that volatility that may lie ahead.
Clearly, for us, it seems to be a consolidation phase for next few months. There are a couple of key events, as you mentioned. State election results will be out by the second week of December. I think some cues will be available after those results, and then really everyone will be looking at the possibility of various combinations for the central elections. I think those two events would be key for markets from a shorter perspective. From a longer term perspective, I think the kind of pressures that we had seen on our economy due to higher crude prices, which also led to currency depreciation, is possibly behind us. But to have a firm view, as I said, we will have to look for the meeting of OPEC and what comes out of that particular meeting. As far as the valuations are concerned, they are still in a tricky zone, which means that they are around the fair value zone. It's not that all the stocks have become very compelling in terms of valuation, but there are pockets where we could see some interest coming in if some of the macro issues continue to stabilize.
What's been your portfolio strategy? I mean, when you have a big decline in rupee, a lot of volatility in crude, a big sell-off in NBFCs, and serious market cap erosion in US technology companies, these are scenarios which I don't think anybody was prepared for, let's say 3, 6, 9 months ago. If the construct of the lay of the land is changing, I'm sure you'll have to change your portfolio strategy. You cannot just buy consumers and private banks and sit tight.
That's true. I think if you look at our portfolio in the last couple of months, we have increased our exposure to some of the private sector corporate lenders. The investment thesis here is NPA cycle at least is not worsening from here. That's what it looks like. We have seen management changes in a couple of these banks, which is also very positive for the overall prospects of the company. And we have seen the other segment, which was anyways overvalued and which had other issues coming off, which means the money which was going into NBFC segment may move into some of these corporate lenders at this point of time. So these are some of the positives that we have seen, and we have accordingly increased our exposure to some of these corporate lenders. But we still continue to remain cautious on the NBFC segment. We have only a couple of names which are market leaders in their respective segments. As far as IT is concerned, yes, it was a trade which was considered to be defensive, and all through this calendar year, except for the last maybe few weeks, the sector has done very well. But we were always of the concern that the mid-cap IT valuations were on the higher side, much higher than the large-cap ones, and hence we stayed away from some of those mid-cap IT names, and that is where we have seen significant correction in the recent past. As far as the large-cap IT companies go, I think from a very high valuations, they have come down to fair range of valuations. I think that makes them a lot more attractive compared to where they were maybe a couple of weeks earlier. So overall, even today, it's not going to be a one-sided portfolio either in favor of cyclicals or in favor of defensives. I think you will need to have a balance of both of those, and that is how our portfolio construct is currently.
Okay.